All right, thank you everyone again for joining us again. Yeah, I think it's been a pretty eventful month to say the very least. With President Trump proposing a new Bitcoin strategic reserve, and just overall general interest in BTC and its successes, and of course, Julian coming back from his roadshows and trips from the United States. So, to get this officially started, I'd like to welcome our CEO and co-founder of IXS, Julian Kwan, and as we give you the rundown of what has been happening or what has happened for May and what are some of the things to look forward to. And of course, as we answer your community questions. So, yeah, passing the mic over to you, Julian.
Peachy, thanks for setting this up as always, and thanks to our team for doing continue to do a great job. And welcome everybody else. Thanks for those that have dialed in from all around the world and on time. We obviously record these. We get most of the people listening at a later date. All right. So where do we start, Jane? Do you want to give an overview of what's been going on in our world since the last couple of weeks?
Yeah, maybe I think there's been a lot of interest on how the trip has been for you in the
Right.
United States. So maybe we can
So
start from there. Yeah.
okay, cool. Um, yeah. So we went to Bitcoin BTC Vegas. BTC Vegas was the sixth conference run by kind of the Bitcoin media company, I guess, Bitcoin Magazine, and that consortium. It was huge. I was kind of going back. I went to Digital Asset Summit in New York 6, 7 weeks before that, just to see what the vibes in America were like, and I was very kind of blown away by the positive activity and excitement. So then BTC Vegas was probably 10x that, 40,000 people. Actually, I was at the industry day on Tuesday, which was run by Strategy and BitGo. But Strategy, MSTR, Michael Saylor's company, has has grown from 500 mil market cap pre BTC Treasury model to 65 billion, I think, at least it was 3 weeks ago when I looked at it. So it's kind of incredible what's going on. There's a massive like FOMO, or basically the hottest model in finance now is creating a BTC treasury company. Essentially, that's raising money. Well, there's two types. So there's private companies doing it. They've been doing it for a long time. We did it for ourselves years ago. Um, you don't hear so much about that because they're private companies. The more and more of them are coming out now in the public saying they've got a BTC treasury, and that's great. But the public companies are actively promoting this model, and there's a few things to that. So the first one is that uh, Michael Saylor's strategy has absolutely blown away every other public listed company on Nasdaq by, I think it's like a couple of 1,000%, right? Um, and Metaplanet is the Japanese version right behind them, um, thousands and thousands of percent higher performance than every other company on the Japanese stock exchange. So Michael Saylor has been promoting this model for a couple of years, and now the data to prove it. If you want to educate yourselves, watch his BTC. They've also set up Bitcoin for Organizations, which is meant to be a non-for-profit led by Strategy. And now it's a membership. It's basically teaching companies how to create a Bitcoin treasury. And part of the documentation is like, how do you convince your board of directors to adopt the Bitcoin treasury standard? So, and that's not even adopting it as your entire business model. You could be a real estate company. It's just saying, instead of having $10 million of cash in the bank, put 5 million of it into Bitcoin. Um, the compounded annual growth rate for Bitcoin's been about 30 to 35%. I think that will compress, but even if it's half of that, um, the returns are just kind of have been astronomical. And who knows, it might even go greater. We're at this point in time where the Bitcoin, the narrative in Wall Street has gone from you can't own Bitcoin, it's too risky, to it's too risky not to own some Bitcoin, because the fiat money printing machine and the fiat money printing fallacy of how money actually works is now being understood by more and more people on a daily basis, and more people on Wall Street understand that fairly quickly when they actually sit down and think about the concept of what money is and how it's created and who creates it and what's it backed by or what's it not backed by and how often they print and the deflationary value that has on money, and then start looking at, this Bitcoin saga and all the information around it, and then listening to guys like Saylor's 60-year-old Wall Street veteran, public company veteran, and the way that he outlines the value proposition is just incredible. It used to be other people doing, Bitcoin evangelist, and then he came in with the biggest, the best company you can build on planet Earth is marrying a publicly listed company with Bitcoin, because publicly listed companies are at the top of the chain of companies, and companies can do things that people can't do. Companies can issue shares, companies can issue convertible debt, companies can loan, companies can borrow, all these kinds of things, right? So the strategy playbook is what people are calling it, which is this Bitcoin treasury, is now being adopted by hundreds of companies. And I met 10 people launching Bitcoin treasury companies. And actually, the Bitcoin conference guys at the time is now being superseded this week by Anthony Pompliano, who's raised $1 billion to do this. At the time, which was only a month ago, Bitcoin Corporation, I think they're called, they launched a Bitcoin treasury company called Nakamoto, and they raised $750 million, and they were trying to raise 150. So it was like 5 times oversubscribed, or whatever the number is. So the reason I'm talking about this so much is because this is like this is kind of like very much a sea change into, the holders of Bitcoin. If you look now, I'm just talking high level. Saylor Strategy owns 3% of Bitcoin. BlackRock's ETF owns 3%. Like, two companies now own 6% of the supply. You don't need too much of imagination to think about, what happens when thousands of companies want to buy, right? Um, and so Strategy's success has been on the up. I think he started buying Bitcoin at 30. It did go down to 20 at one point, I think. Don't quote me on the exact numbers. Anyway, he's been buying nonstop, and he buys whenever he raises, and he can decide at 8 o'clock in the morning he wants to buy Bitcoin that day, and they can issue some kind of security. They're allowed to raise money in the day, and they actually can close in the same day. That's the power of the public companies. And he did that last week or two with like $1 billion. Right? So hundreds of companies are trying to copy, or copying, I should say. Yeah, they won't all be successful, of course, but you know, private companies, that's just the public companies. Private companies don't need any of the drama of trying to list a public entity, doing a SPAC or doing a reverse merger or doing a whatever different ways to take a shell company and turn it into one of these BTC treasury companies. That's what a lot of people are doing. But any private company, ours included, we don't need any of that, right? You just need $1 to go buy a Bitcoin and you have a Bitcoin treasury. It's not hard. It's kind of a fascinating awakening for people, because the Bitcoin asset performance has been so strong that um, a lot of companies, again, even just having a small percentage of that, there's numbers out there online floating around, comparables. Having just a small percentage of your treasury in that and over the last 5-10 years would have absolutely blown away the performance of your business versus what it did without it, or versus your peers. So what does this all mean? It means more and more companies, businesses are going to are owning Bitcoin every day, and companies more than individuals really need to show return on investment, right? Return on capital, and um, because that's what businesses generally do, right? It's an existence of an organization that's there to generate returns and make the best use of all its resources. Cash being one of the most important things. So what this means for us is that there's going to be more and more companies owning Bitcoin. The value of Bitcoin over a longer period of time will definitely increase. That's what we believe in. And we're now sitting at a $2 trillion, $2.2 trillion market cap that we think will be 4, 8, 10, and then 100, right? Out of the 2.2 trillion, give or take, Bitcoin, I forget how much is lost for now, but well, no one actually knows, but certainly a couple of percent's probably gone. But there's a very small percentage of group that is participating. So let's call them BTC investors. I'm not going to call them holders. I'm going to call them investors. So there's basically one main way to generate yields in Bitcoin today that isn't, you know, calling up broker dealers and doing OTC trades and doing like, totally off chain, off market kind of stuff. And the one way to do that is these really innovative, exciting products that are being launched by groups like Maple. Um, I think Maple does loan. You can lend your BTC. You can earn yields, but you earn those yields, I think, in the core token, which is a Bitcoin layer two. And so that's how you can generate some yields. So that's exciting. It's innovative. Um, it's basically Bitcoin DeFi, I think, Bitcoin BTC Fi. Now, again, that's an incredible product. They're getting fantastic success, and I think they're doing a great job. But 99% of Bitcoin investors can't participate in that, or 95%, 96%, a huge, very large percent, because a few reasons. So a bunch of them are regulatory. You might be an institution, a Bitcoin fund manager, an asset manager, whatever, and you're just not allowed by your licensing to participate in any kind of DeFi unregulated activities. That's one of the big challenges of the world is, and DeFi is how do you interact with TradFi and CeFi, centralized finance, that requires licenses and whatnot. So a big chunk of Bitcoin investors can't participate, just not allowed to, full stop. There's another part of the Bitcoin investors that don't participate because they just don't want to. They don't trust, they don't want to risk the investment. They scared of smart contracts breaking, scared of something like Celsius, or just scared of a big meltdown and losing all their Bitcoin. And the rewards in altcoins are not of the same quality as Bitcoin. And what I mean by that is that, if you're going to put up your Bitcoin as collateral to borrow money to earn yields, most people want the yields to be equal or better quality of asset. And so when I think about Bitcoin, equal in brackets, not in every way, of course, an equal yield would be something like a treasury, or a money market fund, a fixed income product, some kind of institutional fixed income product. That's an equal kind of value, right? Um, Whereas a lot of people just don't think that an altcoin from a layer two Bitcoin protocol is of equal value, and that's for people to decide. But some people like it, but the super majority of people haven't are voting with their Bitcoin and not going down that path. But it's fine. There's a big world. There's a lot of use case. I think that's gonna evolve as well. But that led us to what we've been focusing all our efforts on now, which is our Bitcoin Real Yields product. And Bitcoin Real Yields is the first product that is going kind of public, where you can borrow USDT against your Bitcoin and invest into fixed income real asset tokens, being treasuries and money market funds and credit tokens, institutional quality, right? BlackRock, Fidelity, these kinds of names. And through our partnerships, we've worked out a a legal, compliant, and trusted way for institutions and larger Bitcoin investors to now work through us, regulated, qualified custodians, regulated liquidity providers, market makers, to generate this product for them and now bring them those real yields. Now, this hasn't been really done before in this type of way. We're very, very excited by it because I just look at $2.2 trillion of idle capital sitting there, earning no yield. And no, not a lot of people want to promote the fact that they own Bitcoin because of the drama that goes with being targeted and whatnot. But Bitcoin, the digital gold versus gold comparison is really only true in one main area for me, and that's the fact that gold and Bitcoin historically generate no yield. A lot of other things are fairly similar. Are very different then, right? Bitcoin, the properties around Bitcoin versus gold, but whatever. Just to summarize it, that's a major issue. So that's why we brought this out. We're very excited to roll this out. The initial interest has been sky high. There's Bitcoin miners we're speaking to that sit on $7 billion of Bitcoin, $5 billion, $2 billion. As a group spoke to today, 1.5 billion. Another group we started speaking to 550 million, and it's kind of you know the total addressable market there is enormous. And again, businesses have a higher let's say a stronger or a higher requirement to generate return on their assets, even more so than an individual human, right? Um, so this all is massive tailwinds for us, right? So when you think about buying RWA, the historical way before we turn up was people basically taking a US dollar, finding a way to get it into a stable coin, and then coming across and registering and buying an RWA token, right, with a USDT or USDC. And we just added another channel to that. Instead of people having to dig into their pocket and find or go to their bank account and find a dollar, they're bringing an asset they already own that's generating no yield for them, and they bring it into our system that we believe brings the trust and compliance and ticks all the boxes for these types of institutional players, and then they can start to generate yield. They don't have to dig out of their own pocket for cash and just using an asset they have, and it becomes productive. And it's been non-productive. And a lot of these Bitcoin groups, Bitcoin miners, they're actively and every day looking for ways to generate yields. And again, like a lot of them, just the options out there were very, very few, and the options out there they weren't taking on board. So yeah, so that's kind of a bit of a long journey into where we got to, but it's really fascinating. You got to we should, Jim, we should put out the I'll dig it up. We'll dig out Sailor's couple of posts on. First of all, is 21 lessons on wealth, which is good just for the community. But the second one was really the Bitcoin for corporations talk, where he breaks down from a mathematical, economical perspective why every company, why it's now, um, it's good governance for every company to actually follow his path. Now, of course, he's selling his own book. Of course, he's a massive, he's one of the biggest Bitcoin bulls in the world now. He has like 3% of the supply. But anyone who listens to that, who's running a company that isn't even slightly interested or isn't motivated to buy Bitcoin, I think. Um, yeah, it's really going to miss the boat. So anyway, so that was the first parts of trips. Um, yeah, really seeing America just going, full speed ahead on the digital asset space across sort of so many different layers. There was a bunch of massive M&A announcements during that trip, and growing. I mean, it started with Coinbase buying Deribit. I think that was 2.7 billion or something. Kraken bought, I think, Data Ninja or Trading Ninja or something, 1.5 billion. And these are now the biggest M&A deals we've ever seen in our industry. And now we're starting to see this insane amount of IPOs kicking off, and Circle's up 670% or something in like I think it's like 2 weeks. It's insane. And Gemini's coming to list, and Blockstream, and I don't. I've heard of about 10 other major groups now looking to list. So what it all means to me is that I think, although the altcoin market has been hurting for quite a considerable amount of time, Bitcoin's been holding up, and people might be, I don't know, some people might be actually disappointed with that. It's fantastic that Bitcoin's holding up. I mean, if you every single altcoin rally is led by a Bitcoin rally, like it never goes any other way. So if Bitcoin's holding up and then goes on a tear, that's the part. That's the part for the altcoin season. And all I'm seeing is that the Bitcoin, call it cycle bull market, is shaping up to be something that like we've never ever seen before. And even if people check their altcoin price every 3 seconds and feel like they're disappointed or they're down, you've, it's just extraordinary what's going on. And now, constantly, every day, we're speaking to more and more groups. So yeah, look, so I mean, I couldn't be more excited by this product. I think the team's been working around the clock. This has taken 5 months to really pull together and shake it out. There's legal, there's compliance, there's a lot going on. There's some key partnerships, contracting, there's risk reward profiles. There's a ton of stuff that we're working for to try to bring what we consider to be a killer product to market for the Bitcoin investors. We see that pool of money just growing and the opportunity growing. So anyway, G, I've been talking way too much without a break. So hopefully that covers it. Oh, sorry. And then I finished off at the Silicon Valley Plug and Play Summit. So 4 or 5 thousand people. I kind of soft launched the project there to a bunch of so Plug and Play is essentially the world's biggest VC accelerator. There's 600 corporations that sponsor them to create all these different accelerator programs. So we led the first RWA accelerator. We did some work with XDC, one of the protocols, and we developed a whole bunch of new relationships. So the corporates are basically paying Plug and Play a lot of money. I think it was 150 million dollars a year to develop all these different programs, fintech, healthcare, whatever they're interested in, and then to bring the best startups they can find around the world to then go on stage and then present to thousands of people at the event. So it's basically used as a vetting system. So then the corporates can then start speaking immediately to the best companies in the space that have been vetted by Plug and Play teams and their partners. So yeah, that went really well. Yeah, so here we are. That's it for now.
All right. Thanks for that update, Julian. And I think
Yeah,
we can jump into the questions. There's quite a few here.
sure.
Since we've already been talking about BTC Vegas and how we're, everyone's just basically bullish on BTC. US launching their strategic crypto reserve, and just a lot more
Yes.
institutional companies kind of just hopping onto the micro strategy when it comes to acquiring Bitcoin. I feel like this first question is just in line with that, and I'm not sure if you've already answered this, but I think a lot of people in the community would love to hear more about this. But the first question being is, what's the feedback from large players been like towards the BTC yield program?
Mm. Yeah. Well, so the product was actually um, kind of the seeds of the product were planted in my head over the last 12 months. We've had massive BTC treasuries, miners, etc., asking us if what we can do with Bitcoin to make it more useful, more usable. Um, so the actual genesis of where this all began, came from those discussions, which led to, well, why do we need to make Bitcoin more useful? And then it was like, oh, because we do this business or that business, and we hold these huge amounts of Bitcoin, and we need to diversify, but we also, what else can we do with all this value? So that led to, all right, let's maybe look at issuing some real world asset tokens on Bitcoin protocol, which no one's ever done before, which led to, how much Bitcoin have you guys got? And it was led to billions. And then it was like, well, what are you doing with it? And it was like, well, we're trying to create value for it, but essentially we hold on to it and then we sell a little bit and then we just hold on to it. So, and then we've been doing this business for so long, look how many we've got. So then it was like, all right, well, what if we brought some real yields to you guys and created, a clean loop, let's call it, to generate real yields. I mean, if you're sitting on $1 billion and you could get 5% extra returns, that's $50 million, right? And when you put zeros behind things, you can really see the scale. Like who who in the world has $1 billion of value with something wouldn't want $50 million extra each year by participating in something that makes sense. So, of course, then you have to have something that's robust, that's institutional, that ticks all the boxes, that's going to pass compliance. None of these companies are going to muck around. They're very big, serious businesses. They're not in the business of losing money or Bitcoins as well. So, yeah, so I think then we've also had a lot of people calling us, individuals, um, asking if they can participate. We're starting this at an institutional size to begin. Um, there's structural challenges around this in terms of what company structure, what types of investors you can take, who's managing these structures, how much does it cost to manage, what's the compliance, what's the license to manage the vehicle that's taking the money from the investors. It's a loan. There's a loan going on, so you need to understand what's the lending, and there's crypto involved, there's securities involved, there's cross border, we've got a laundry list, right? So the more that our community that's been with us, the more they probably give some respect to the fact that all this stuff is there's a lot going on behind closed doors, and it's a lot more complex than a lot of the crypto stuff. But that's what we do. But so there's a lot of individual interest. There's a lot of interest from the Bitcoin mining community. And then again, there's we tried to work out today, like how many people own $1 million of Bitcoin. GPT says there's 82,000 of them out there, and some of them are wallets for exchanges and whatnot, which it could represent infinitely more. Crypto exchanges is another group of people interested. It's basically anyone with Bitcoin, because Bitcoin, we're not, we didn't create the problem, right? The problem was that Bitcoin was meant to be money, which it really wasn't. And then it was these other things, and then it became store of value. And then over the years, that's just been everything it's been good for. And so the Bitcoin DeFi, Bitcoin Fi, over the last couple of years has been really trying to make Bitcoin more useful. Um, the interesting part about that is that, Bitcoin in itself is, decentralized value system, right? It's certainly not a licensed value system. So all the product offerings in the market today went down the route of, we're not doing licenses, therefore we're not offering RWA, but we'll offer other rewards. Again, it's innovative, exciting, it's cool, which are altcoins and DeFi rewards. But again, you're sitting on $5 billion of Bitcoin. You don't want a bunch of altcoins, but you'd love to have some treasuries or some private equity. So yeah, initial interest been incredible. We've been yeah, well, the team's just been hard at work getting everything ready. But I think that um, this has definitely been the strongest initial interest we've seen from anything we've touched since we started building in this space for 6 years or so.
All right, thanks for that, Julian. And I like the fact that you touched on licenses there, which is kind of related to the next question. Being IXS, we really, took a stance of being regulatory compliant along with sister company InvestX. So I guess the next question I want to ask you is, are there any other plans to go after licenses in places like the US, UK, or the EU? And if so, will we see IXS eventually opening up to either accredited or retail investors in those regions?
Yeah, so right now, IXS allows onboarding of anyone in the world besides, sanctioned countries. We chose not to onboard Americans because the US rules and regulations were, well, choke point 2.0, which was the attack on the industry. So no one wanted US investors up until like this year. Well, no one was really considering it. And all the US companies were leaving America, and it was just a disaster. So essentially, we can onboard anyone in IXS. We don't need any more licenses anywhere else to onboard people. Um, but regulations. So two things. Um, we are looking to set up in the US and just have a US entity for the US investors. So they'll be standalone. I mean, half our traffic's from America. We haven't really tried there yet. Again, not because we didn't want to. Alice, one of our co-founders, is American. It's just that the regulatory environment was just so toxic. It just made zero sense, which is why I've spent, nearly 1 or 2 months of this year in America already, looking at how to best make those moves. Now, so there's three things. So that's one thing. Second thing is that Trump and administration there is obviously become very bullish digital assets. It's also extremely volatile, right? Like extremely volatile. So it's Genius Stablecoin Act looks good. The market structure bill looks good, which is for everything else besides stablecoins for approval. But it's not set in stone today, and we can see the dangers of betting anything on what the current administration says, because it might change before the phone call finishes. So my point that I'm trying to make is that you don't just go, hey, let's go to America, snap your fingers and open up. Like you're looking at a super important market that is moving 180 degrees different direction than it was 6 months ago, for the direction it had been in for 4 years, which was death to crypto. And now you've got, like, we're going to own crypto, but then you've got regulations, you've got different states, you've got different types of licenses. But yeah, I would just say that, yeah, I'm very bullish on America, and we're very interested to seek the right type of partners and get started there when it makes the most sense for us. The third thing I want to say is that regulations are extremely complicated, overly complicated. Uh, I think um, uh, depending on where you live and what you're buying and how you're buying it and where you're buying it and what you bought it with. All right, so all those 4 or 5 things matter. because it's the type of currency you're using now, and the rules around stable coins and fiat and can you transfer. Then there's like, is it a crypto exchange, an RWA platform, and am I allowed to register in that country? And what am I buying? Is it an RWA? What's the underlying asset? Is it a trust? So my point is, there's a lot of complexity. So that just to finalize, like, what do we think about doing the rest of the world? Like, I'd rather have no more licenses. It's an absolute, it's extreme cost, brain damage, and time. 5.5 years we've been in application for our license. They've all been approved. Um, we can onboard people that we want, except the Americans. So the Americans really are the piece missing. I'm not very excited by Europe. I think European regulators are doing their best to kill crypto, and RWA is like even more complicated. Um, we've never been focused on Europe. I don't say it in a negative way. I think we're focused on Asia, which is enormous, and now America. So that's kind of our playfield. There's been a lot of interest from UAE trying to get us to go there as well. And I'm not opposed. I don't. We're still exploring that. We've been over there once or twice. Um, what this product is now, I think, for us is much more relevant to that marketplace. I think the UAE, sort of from the crypto side, and the RW side is very, um, most people are very misguided. I think that there's very few. I think it's changing because the governments are investing a lot of money over there, like investing a lot of money, especially in AI and blockchain and whatnot. But there historically hasn't been any builders there, and there's just been a lot of people selling coins, at least from the venues and the events that I've gone through. And I think that'll change over time. I think there's probably a lot of people sitting on Bitcoin doing nothing. So then that makes that market sort of more interesting. And it will just depend. We've had regulators over there like offer us free licenses if we turned up. Um, but again, it's like, no one in DeFi understands the pain of licenses until you actually, versus the guys that actually have them. You don't get licenses because you're dying to get them. You get them because you have to have them, and then once you have them, you want to try to have the least amount of them as possible. But you spend all your days managing your license instead of building the business. But to cap it up, we're a global product for global investors today. Um, we're good with licenses. We don't need any more, unless we want to go, which we do, ramp up the US and make that a business in a siloed in its own right, just because of all the drama with reporting and taxation and all that kind of stuff.
All right, thanks for that answer, Julian. And I guess you kind of touched off on the one point that I'm going to ask next. So you've mentioned trying to set up an entity in the United States, and I guess the next question is, what is the progress on opening up an office in the U.S. and if where are we in the process of that?
Yeah, I think I kind of touched on that before. Just heavy exploration. Which jurisdiction, rules around that? That's a moving targets as well. The US regulations changing now on a daily basis in brackets. Like, so, we got some investors who already invest in our company, um, who are helping us with map that out. But yeah, even people that are on the ground there and in the space are, let's just say, still trying to work out what the best thing. So I'd say it's important, but it's not urgent. 'Cause the last thing you want to do is spend a whole bunch of money, spend a whole bunch of time, set something up, and then you're in the wrong state, you're in the wrong part of the country, you've got the wrong license for what you really want to do. Trump changes the rules again, and you start again, and you just wasted a couple hundred grand in a year. So there's a lot of considerations, but yeah, that market's certainly not going anywhere, but in a positive direction. So yeah, we're definitely keen to work something out there.
Yeah, I agree with you. There are a lot of
Yeah,
considerations there. Okay, I think we
yeah,
can move away from that. And I think the community is particularly interested. I think last week we just dropped the new IXS BTC utility. So I guess the community
yeah.
would love to know more about how can we highlight in what exactly the concrete ways that value will be given to the IXS token based on the BTC real product.
Yeah. So I think when we started the project, quite a few years ago, the goal was to, intertwine the token into the original business model being DEX and build from there from utility. Um, I think the reality is that we were super early. We built something that worked. the quality of RWA assets 3 years ago was extremely low. And that's not our fault because we can't build the infrastructure, run everything, and then also be go get the assets and tokenize them and manage the assets, which for some people thought that was our responsibility, but it wasn't. So we did, I think the team did a great job, but then I realized that the real product market fit has become uh, fixed income products, and that real market product fit can be found online, on chain, treasuries, money market funds, credit tokens. Fortunately, unfortunately, we've gone all the way back to Wall Street. But the reason why those assets are finding product market fit is because they offer the most value holistically. So um, the treasuries, these types of, let's just say, treasury tokens, they're providing yield for stablecoin holders that earn zero, right? So that's been a very unique part of crypto, is that like hundreds of billions of dollars of stablecoins earn no yield. So hey, what if we tokenize treasuries and those guys getting zero can earn 4%? Well, that's 400% more than zero. Hey, that's pretty attractive. And away we go. We found some product market fit. Now, a lot of other assets have been tokenized, but it's hard to scale stuff that's not liquid before being tokenized, right? So if you've got an asset that's liquid on paper, like a treasury token, like forget the token part, or money market funds, on chain, they're also liquid. So that's the hard truth I think us in the industries had to face. And although tokenization offers the most value for illiquid assets are still a liquid once they're tokenized. So when you think about um, these these fixed income products, these treasury tokens, and Biddle's doing one of the best jobs. I think they've gone to 3 bill. They're about 1 billion 2 months ago. The treasury token earns a yield for stablecoin guys. Traders are using them as collateral to borrow against them. um, there's just multiple use case because so many people understand what a treasury is, and it's easy to validate that there's actually a treasury backing the token. Whereas if it was Gene's startup token, Gene takes his RWA around the world and says, you guys should use it for this and that. And everyone's like, well, how do I know what it's worth? And you're like, oh, it's my company. And it's like, well, what's the value? And you're like, it's $2. And like, and who else agrees with this? And Gene's like, me, it's my company. And it's like that's a very simple example of the challenges faced by non-liquid RWA sets. Right. So anyway, what does that mean? I think that like we've got to focus where the scale and the action is. And again, if we think about back to our BTC real yield product, I think about it like it's like mortgaging your house, right? Borrow money, use your house, solid, it's big, it's one of the most valuable things you've got. You borrow that money and you do whatever, right? But you've used your house as collateral. So then now we think, all right, well, if people could use their Bitcoin as collateral, um, the one thing they're going to want to invest into is the same thing that has been proven to have product market fit in stablecoin land and the rest of the crypto universe, which is these institutional yield bearing assets, the lowest risk, highest liquidity. And again, when you come from earning zero yield, 4% treasury tokens, 400% higher. Now, people in crypto might go, 4%, that's not much, 4% APY, I'm getting whatever, blah, blah, blah on this DeFi platform. I'm like, yeah, but that's all DeFi, which is always like a house of cards of all these altcoins. It looks good on the way up and it all falls apart on the way down. What we're offering people is like the best quality assets in the securities world, right? Um, which I think is the is one of the key value propositions to what we're doing.
All right, thanks for that, Julian. Yeah, and I just want to add on here. Basically, the utility that we're giving IXS is dependent on the success of BTC, and where
Yeah, oh, sorry. Yeah, I didn't get to finish it. Yeah, sorry. And then so the point now after all that was that um, we just simplify the whole value proposition of IXS, and so a percentage of the platform fees are used each time to burn and buy back IXS to create a real deflationary mechanism. So what we've said publicly, Gene team did great job launching this last week. Is if you only need to remember one thing about the utility, it's just like the more the Bitcoin market cap grows, the more people use their Bitcoin to borrow more money to buy more RWA that creates more revenue for our platform that burns more and more IXS as a deflationary matter, and then we bring out some other innovative ways to use the token on the platform. Because we're institutional focus, I think that's the best, most important part of the utility of the token right now. And it doesn't really matter if you can use it for this fee and that fee, that's fine. We can keep building that out. The one thing people just need to do the mathematics on is market cap of Bitcoin growing, volume of Bitcoin being used to borrow, amount of RWA being bought, fees that we generate equals, buy pressure onto the IXS. So I'm really happy with that simplification, and I think it's a lot easier for people to understand because I do know that tokenomics get complicated. So we do have a few more, but I don't want anyone to talk about the rest of it because I want people to listen to this podcast and read the transition later and go, okay, that's what that's for. Okay, I get it. That's the utility. That's all I need to know. I'm going to bet on this or I'm not going to bet on this. And obviously, we're betting our whole lives on it. So hopefully that is now clear for the team or the community.
Yeah, and do not worry if the audio is unclear, we will be providing a recap of this, so stay tuned tomorrow. And I think I also want to add there the beauty of this product as well is we're also injecting, at least 1% of the BTC market. If we could capture that and bring that into RWAs, which we are effectively increasing the TVL of the RWA market as well. So it's like a twofold mechanism for this BTC real yield product.
Yes.
And
Yes, 100%.
yeah, yeah, it's a pretty the magnitude is great here, and I guess we can jump into the next question here. I guess since we're on the topic of TVL, what are the developments on the 1 billion plus TVL in the pipeline?
Mm. Yeah. Well, look, I think there's a lot of people lining up assets. There's been a bunch of fun and games with issuers who have signed up, um, said they were bringing large assets to the table. We've done due diligence on them and they didn't stack up, right? There's a lot of compliance and due diligence we do on assets to get them on the platform. When you see an asset on the platform, it's often been 2 or 3 months of us to do legal work to make sure that it's Gene. He's real. He's got a real license. His assets real. His assets really worth what it's worth. Who's valuing it? Do they even have a company? Do they even know what they're doing? Are they trustworthy? Is there another version out there? Et cetera, et cetera, et cetera. Um, but again, I think ultimately one of the challenges of the space is that people just tokenizing an asset, putting their hand out and expecting free money to fall out of the sky, regardless of the quality of the asset and its liquidity and all those elements. Um, so now we're flipping that all around. We're sort of saying, all right, well, um, the assets in the fixed income space don't require upfront funding. And that's another problem that we're alleviating is that when you think about private market assets, they always need to have a funds raised to close the deal, right? If Gene's raising $5 million for his company, typically he's got to raise $5 million. Right? If he raises $500, it doesn't work, right? The offer's for $5 million, or even if he's selling a portion of an asset, often it's got to be $5 million or zero. That's the answer. So now with our fixed income products, they're very liquid. Before we turn up, like treasuries, right? Before any of us turn up, a treasury is pretty liquid, one of the most liquid assets in the world, actually. So you don't need upfront capital to buy them, which solves a lot of the issues with people trying to list products. So my point that I'm trying to make is now the pipelines, there's an infinite amount of RWA to buy, but you need the money to buy it. All right. So and so what we're doing now is we're creating this powerful force of buying power, which is also because we're solving one of the biggest problems in crypto that exists that most people never talk about, which is Bitcoin produces no yield. Unlike nearly every other token out there has some kind of yield dynamic to it, because often it's just like stake ABC token, get ABC token in rewards. So we're bringing now, instead of people should be thinking about this before thinking about like, oh, how much assets are they buying? It's like, all right, well, how much of that Bitcoin market cap will be translated into buy power? And then now we don't have to worry about onboarding all these different assets every single week, and then the months and months of around that, and then everything going out and having to raise X amount of money, or the deal doesn't go through. Now you can, you want to put in $100, you put in $100. You want to put in $100 million, you can put in $100 million, and it's that liquid and it's that fast, and that's the possibilities. So people should, in the community, should be thinking about Bitcoin, $2 trillion, as you said, Gene. If we can get 1% of that, how much is that? And then what does that translate into? And then what if it was more than 1%? And we're going to just go and push to be the dominant player in this space to attack that. Now it's 2 trillion. When Bitcoin's at 200,000, 4 trillion, half a million. When Bitcoin's at $1 million, it's going to be 20 trillion. Right. So then, there go the numbers, and it starts to get pretty wild.
All right, thanks for touching up on that, which kind of relates to the next question. I guess we can just repeat this just to get it across. The next question is, how will IXS capitalize on the RWA narrative and use that attention wisely when the time comes?
Oh, that's your job, James. Maybe no, seriously though, why don't you share thoughts on that one? Because I think that's very much around our marketing efforts and all the stuff that we talk about each day. But if you'd be willing to jump in on that.
Yeah. I mean, I think Julian mentioned two amazing great points, right? The traction on fixed income assets and basically the whole narrative around BTC. I think from a marketing perspective, you can't come to a better equilibrium and two forces come together better than this. So how are we going to capture that? How are we going to use that properly when the time comes? Is we'll do what we've been doing so far. We'll keep building and we'll keep delivering on our promise. And as that time comes along, we'll just see. We'll try to get there. Get, like as we mentioned, try to get at least 1% of BTC into RWA TVL is a story in itself. It's a powerful narrative in itself. So when that time comes, the community will be the first to know, and when that time comes, I'm pretty sure we'll be on another AMA talking about that.
Sounds good.
Okay, I guess the next question is also for the marketing side. I'm just going to ask this, but feel free to jump in, Julian, whenever you want. So the next question is, what is the plan with the marketing side, and is there going to be use of any KOLs, or are we going to focus on building the community? With the plan of the marketing side, I think we laid this out recently. We've been talking. It was pretty funny because we were discussing how somehow when it comes to IXS, we've always been kind of on the unlucky side when it comes to other events. But I guess with the marketing side, we are going to be focused on building the community mainly because, as Julian mentioned, that the first wave of the BTC real yield product will be strictly institutional. But as we go along, as we build out the phases, it will be available to retail. So what does that mean? In the meantime, we have a few KOLs in our roster already. We also will be focused on community building. We have a new community program down the pipeline that we can't wait to share with you guys. And in the meantime, the community has been great. I love what our mods have been doing, and as well as the fanatics that we have at IXS. So we want to build more of that. We want to keep that going, and basically, we've seen every content, everything that you guys have been putting out there, and we just want to exponentially increase that, and also add value to that, and also provide more people jumping into the IXS fan base. That's more for the marketing side. I mean, as usual, we can't share as of much yet, but it is coming down the pipeline soon, so stay tuned. Okay.
Yeah, I think,
Yeah.
and I just add to that, like, um, no, it's a very important point, important question, and I think that um, we're in a position where we've taken the long road to build something real, and we appreciate the community that stayed with us throughout that. There's a million projects that have come and gone since then. There's a million RWA projects that just talk a whole bunch of bullshit, lie about everything, try to fool everyone in their tokens, and then it all just dies. The RWA space has already been plagued and attacked by groups um, that are here to do kind of do the wrong thing, right? There's a whole lot of um, untrue statements constantly shielded by protocols, layer one, layer two, about how they can do all these things, and people just don't understand. Like, a protocol is a technology layer, and if you want to touch securities, you need all the licenses and all the infrastructure. So when you're hearing like protocols claiming they can do everything and this and that, it's just like saying that email can run a business, right, without anything else there. And it's not true. You need all these people, and you need rules, and you need people to sign stuff, and you need company structures, and it's just like that. Um, but the narrative has the value has been sucked up by a lot of these groups, but there's actually nothing there behind it, or even worse, massive rug pulls going on. Um, I'm not even going to name names because I couldn't be bothered dealing with the crazy people yelling at us. But my point is that we we've been in the space long enough. The dynamics have changed. Um, the so-called KOLs of the past aren't, don't provide any value these days. It's much more noisy. It's much more competitive. You used to get pump and dumps of Bitcoin on the smallest, absolute smallest news, and then the alts would go crazy. And now you can get, Donald Trump's buying Bitcoin, and Bitcoin doesn't move or it goes down. Like, so, it's actually a pretty wild space to try to market in. And one of the challenges we've always had is that we've had a real business, but then everyone else was not everyone else. A lot of other people were doing what I was just talking about 5 minutes ago. So they're talking about all this stuff that isn't true, and then people go, "Oh, well, look, these guys are saying what's actually really happening, and it's not as exciting enough because it's 100x difference." That's all starting to change now, and I think that we moved towards IXS finance with a lot of heavy lifting back in December, January. Um, the swapping model hasn't taken off. That's the reality, even though we were first and we've got a DEX and we've got V2 sitting on the sidelines waiting. What has taken off is the fixed income products, and that's where we're putting our energy. So you can only for so long run a startup where you want to do something, but you've also got to you've got to listen to the market. So now that we've got IXS Finance and it is focusing very much on financial products, um, much more institutional focus. And Dean would know as well, we were probably the first in the world to get a retail license to allow anybody with $1 to invest in a real asset token. We launched all these projects, and it was hard to scale them because most people don't care about actual equity tokens. They just care about ICO and utility tokens. So we did all this heavy lifting to build the product to deliver the promise, but everyone wasn't. No one's being honest about what they really want to buy. They don't even want to buy these things. So these are all the hard lessons we've learned along the way to now get into a position where the positioning, the branding is spot on. It's targeting the right types of investors. It's positioned in the right way. It's targeting the right types of assets, and now it brings the power of Bitcoin, which is to lay over the whole top of the narrative. So, I mean, we can take people yelling and screaming this all day long, and Gene and team take some pretty awful abuse at times, just because people think that you can snap your fingers and token price goes up. Those days are gone. You've got to have a real business and real products. So I think I'm super excited that this next cycle there'll be always constant gambling craziness out there, and that might exist in the meme coin world and whatnot, but it's going to be a cycle for the platforms that have spent years actually building something real, and that's going to finally come to fruition. And no amount of marketing is going to change that. Right? It's actually a performance based. Of course, we need to play the marketing game. We've got KOLs lined up on whatever, but we're really just focused on building the real business, and we'll keep pushing as much marketing out as we can afford to do that we also think makes sense. But the real action is institutional Bitcoin holders. So we don't need to spend millions of hours talking to degens answering all these questions about all these products they're never going to buy. We've got to spend our time actually selling a real business, which translates into real use case for the token, real revenue for the platform, which real burning of the token, and away we go. So I just kind of lay that out there for anyone who might be new to the project, that we've been through all the fun and games of seeing all these other projects and all these untruths being told and all these different ways and all these pumps and dumps of the teams rugging everyone, and we're still here building. Maybe that was the less intelligent decision because it was a lot harder. And we're all still holding on to our tokens because we're here and we now think that this cycle is going to be our time, and we'll support that with as much intelligent marketing as we can. But yeah, again, like I could put out 50 million KOL posts last week when Israel's blowing up Iran, and the pricing is going to go anyway, and people need to understand that. And there's a lot of considerations. There's cost, there's relevance, and there's also community engagement. And we've got a fantastic community, so we thank you guys for your support. and we can. And we brought in a lot of really good tools to help us sharpen up our marketing. I think the image and the positioning and the volume and everything's bang on track right now. And we just got to keep our heads down, working hard. And I'm very confident that we'll see all-time highs for IXS sometime this year.
All right, thanks for summarizing all the nuances in marketing and DeFi, Julian. It looks like we are 4 minutes away from ending this AMA, so we do have one final question. Well, it's more of a suggestion, but I think the community would love to get your thoughts around this. So, the Access community would like to see new developments on the roadmap. Is there any timeline where we can implement an update on this?
Um, yeah, I mean, I don't know. I guess that question's over to you, Jen. What are you thinking?
Yeah, as we mentioned, as Julian mentioned, we are going to keep our heads down, keep building. We will be focusing on this BTC real yield product, and hopefully try to get and you bring that 1% fruition across. So that is that. And as always, keep tuned. We will be playing out our next AMA. We do have another one tomorrow, but in terms of the roadmap, the ISIS team has always been transparent, and any progress that we've had on the platform and the team or whatnot has always been translated to the community. So best that we could say right now is just stay tuned and trust that we will get that across when the time is right.
Yeah, sounds good. I've got to jump to a call, Gene. Thanks everyone for listening. I hope that was really helpful, and we appreciate your support and look forward to the rest of the year.
All right. Thank you, everyone.
All right.
Cheers.
Cheers, Gene. Bye bye.